Good evening. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for Tuesday, and this is the 15th of October, 2024. And the time right now, 6:20 p.m. Central Time. All right, so today we see that the Biden administration putting a little more pressure on Israel, saying that humanitarian needs in Gaza need to be addressed. I don't know that they're talking that corridor that Israel's talking where they're going to do a siege and try to get Hamas to, if you will, starve them out. So I don't know that that's included, but the rest of Gaza is a mess. We've known that. Israel knows it. And now the Biden administration is threatening arms for food. And if something's not done in 30 days, first time I've seen him really give a time frame, arms shipments may stop. So again, it's an ally relationship that is a rough shot. We then saw President Trump talk today. I hope you saw that on Bloomberg, where again he just can't control himself. You know, he antagonized the host. All right, on Bloomberg of all things. And the one thing I got out of it: if he loses the election, he's reserving his right to contest it again. He thinks he's ahead in a major way and should win. And he said to you, and I write about this in my news report tonight. You remember, if you haven't gotten it, you can go to iraepstein.com and get a copy, a free copy by going to free offers if you haven't had it before. And I really reviewed it. But he said his favorite word is tariff. So this is going to shake up Europe. It's going to shake up everywhere. He wants people to build plants here in America to sell their products. It's really that simple. And he laid it out. He couldn't be clearer. So you know where you're headed with that. All right. When we look at the markets, you can see that you're getting a little bounce tonight, but you did break today in the markets. Now, today's Tuesday. What did I warn you about yesterday here? I said Tuesday reversals can take place. You've got big rallies, Yale Hirsch, Trader's Almanac. I gave you the whole spiel on that if you were listening in the financial tapes. And you did. You got your pullback. That doesn't mean the trend is over. I hear traders keep saying that, you're priced to perfection, blah, blah. You know, I've heard that for a year and a half. And I saw people fighting it for a year and a half, and they don't win that battle. You're better off being with the trend until the trend ends. It's that simple. In the gold market, you're basing near the 2,700 level. So that's very important. The silver market's still acting good. Now, copper's already off from the 379 level down to 433 quite a bit. So it's already built in that what China said and what it can do are very different worlds at this point in time. And we'll probably see overnight some pain in that. When you take a look at what the events tomorrow are, we're going to get the Bankers Association numbers at 6 in the morning, the September import-export price indices at 7:30, and we'll get the energy numbers, and they will come out tomorrow instead of today because we had Columbus Day on Monday. So understand that. When you look at the energies, understand that you're back to the 70 level in the crude oil. Why are we not hearing that the U.S. wants to buy more crude for the stockpile? Joe, come on, do something. In the Brent, you're down to the 75 level here. We had a bounce today in the bonds and the notes, and I don't know that that's the beginning of something or not. It acts on the charts like the 2-year is going to lose its bearish embedded reading, and that could be where the market start a bit of a rally. In the gold market, as long as you stay over the 18-day average, you got a bullish situation. It keeps you straight in the market. You need something. I've always found that to say, should I be bullish, bearish? What should I overall be? When you're over that number, and this is a close-only chart, I just stay with that. Now, you can see what we've got here. Is it a inverted head and shoulder? I don't know. It's an interesting pattern. If the market can get over this level, the 2,700, traders will say a shoulder, a head, another shoulder, and if you break out, that's where the market goes. So this little pattern could be called an inverted head and shoulder pattern. When you take a look, you see how the shoulders are matching up when you put a swing line on it. I think you'd agree they're pretty darn close to each other. That's 2690, that's 2684.20. So on the chart, what you have right now are lower highs and lower lows, but if you take out If today's action is taken out, getting over that high, you start moving the pattern to higher and lows. And if you take out 2684.20, you convert to a bullish picture on the chart. Where's this all happening? Right at the 18-day average of closes, what I call the line in the sand. And if the market goes up from there, 2703.50 is the first objective as it now stands with the Bollinger Band. Momentum pointing up and not overbought. Gold-silver ratio still favors the gold market as you're over the 18-day average of closes. When you look at the silver chart, it has turned bullish. So the market is now higher lows, higher highs. I don't think you're coming back down here is the problem now for those that want to get long. And I think you're getting the people that want to buy nibbling. I want to use that word very carefully. Nibbling on the long side here against the 18-day average. They probably don't want to see the lows of yesterday. Let me get to that for you. So let's see if I can get this to show it. Come on. There we go. Yesterday's low of 30.94 taken out. That would be the number I wouldn't want to see if you're nibbling in here on the long side. That's quite a bit of risk, by the way. That's 70 cents in round figures. 70 cents is $3,500 if you're trading full-size contracts. That's an awful big risk to take on in the marketplace, in my opinion, but it's what the chart is showing. And if the market goes up, the 32.80 level's the next resistance. In the copper, the reason I'm no longer super bearish is the market's now down to the 100-day average, and it's giving you like a horse. If you're riding, you're pulling back. The market's trying to find its footing. If it keeps going down, the 429.85 to 427 level, the 200-day average and the Bollinger Band are waiting, but you might be at that point where you're pulling back on the market. It's been a heck of a break, and the only market that's acting really, really good in metals has been platinum. It is holding the 18-day average in the 100. You don't want to see prices under 976.90 if you're going to keep the bull trend up. And if it can lift itself, the 1030.50 level's the next objective. The dollar index was down today a fraction, but it is the nemesis of rising metal prices because a high dollar, strong dollar, and a strong interest rate market, which we've had over the past 2 weeks, hurts this market, keeps the dollar strong and hurts the metals. And you can see you're at the 200-day average, the gray number here, fighting for that, and you have your embedded reading. So until that reading's lost, you're still bullish. And that's why that silver is a problematic number to be buying just where it's at right now. So with that, I'm Ira Epstein. I will pick up with you all in the morning as we go through what the facts and numbers are. I am intending tomorrow to do a special report. I'll let you know once I get it done. It'll be in the evening review as to how you can go and take a look at it. I'm Ira. Take care.